everyone. Good morning or afternoon, depending on where you are hearing us. And welcome to today's panel. I'm excited to be hosting this panel. We were chatting, of course, in the Czech tech leading up to this moment, and what's new, what's interesting. And I was commenting that, well, summer can be a little bit boring in the resource space. It can be a little bit feel like you're speaking into a void, and the audience isn't interested. But on this panel, we have three stocks that are interesting with great share price moves and active exploration programs in parts of the United States that are getting a lot of attention. So I think this is a pretty fantastic group to run through today. I'm going to start with just a quick sort of run through of what I'm seeing out there in the macro space today. I'll try and keep it pretty brief because I think we want to get on to the presenters and the stock picks, the stock opportunities that are being discussed here. Let me underline first that if you have any questions, we will absolutely be doing a Q&A at the end. I'll speak. Each of these guys will get a chance to outline their company, and then we'll do a Q&A at the end. So please enter your questions in the chat, the questions part of the chat portal, and we will make sure that those get passed along at the end. So here's my talk. What forest? All I see are trees. This is my cheeky way of summarizing that it's a pretty crazy macro landscape out there, and everybody's reacting to individual data points, in my opinion, without really caring how those data points fit into a real, fundamental fabric. And that's just the way it is. You kind of have to run with what is, as opposed to spending your time being annoyed that people don't understand macroeconomics. So what do I mean by that? Okay, so negative real rates are the most important factor for gold, and we are in clearly a negative real rates environment, and that will not change for a long time. I love to start with this chart of real rates. This is using the 10-year Treasury inflation index security as a proxy for real rates. And it sort of explains the gold market that we've had for the last 5 years. The gold bull market started when real rates started to drop in 2016. Then rebounding real rates hindered the gold market for a few years. Back in 2019, that's pre-COVID, so it's hard to remember anything past this, previous to this crazy year. Real rates had been declining again, and gold had actually been setting up reasonably nicely. And then bam, COVID hit, pulled real rates deeply into negative territory. And it doesn't look like we're going to exit that territory anytime soon. Almost no matter what you think about inflation, we're not going to exit that territory soon. So we're in a very negative real rate environment. And the chart below shows how strongly the gold price is correlated to negative real rates. You have real rates inverted on that chart, and you can see they just move in lockstep. That is correlation. If we move on to the base metals side of things, obviously I'm painting with broad strokes here to try and talk about the metals macroeconomic landscape in sort of 8 minutes, but you can say that for a lot of metals, the electrification and growth story globally just means that we have strong demand against what's generally weak supply. I mean, that's what caused the copper price to do what it has done in the last year. That's what's causing the nickel price to do what it's done. Palladium has gone on a crazy run in quite a few years. Iron ore, metallurgical coal, these things are all really strong these days. And again, this is just a very broad statement, but it's generally because, that old bear market in commodities that we had resulted in underinvestment. And then we have this electrification revolution that's coming up against a lack of supply. And so fundamentally speaking, base metals are also pretty well set up. Of course, there's individual differences, one metal to the next, but I'm not going to get into that today. So that's the big picture, right? It looks pretty darn good. But in the short term, these fundamentals are sort of hidden behind reactions to day-to-day data points. And so I use here an example, the non-farms payroll report for July that we had a week and a half ago, 2 weeks ago. It surprised the market with its strength. And when you get a strong payroll report, the traders saw inflation and growth, which you'd think would be good for a variety of reasons, but instead they just see rate hikes in there. And then because everybody is obsessed with the Fed, that hurts gold and it boosts the dollar. If that doesn't make sense to you, it's because it doesn't make sense. Okay, that you kind of have to let go of the fact that those reactions on a day-to-day basis, the reactions in gold, often in bonds, often in even base metals, don't necessarily make sense. It's because traders have been trained for over a decade now to focus on the Fed, and that's because there's been incredible levels of support, right, with zero interest rates and quantitative easing and all of that. So the only trade that matters out there is getting ahead of the Fed, and the way that that is enacted, the way that that plays out, is often counter to fundamentals. And that's just the world that we're in. I mean, inflation as a whole is another good example of that. Inflation, if it's happening, generally means economic strength. That advances the base metals argument. And inflation means more negative real rates because the Fed is not going to get ahead of inflation. It's going to follow inflation if it sticks. So that supports gold. But when we hear about inflation, like I say, everybody assumes rate hikes and they assume that that's bad. And so we get negativity across the metals market. So it's a bit of a weird setup right now. At some point, we will get through this, and I think fundamentals will reassert. It might take until we get to a rate hike, or it might take until somehow there's more clarity on the path forward, but that's just the situation that we're in. Now, is it fair enough? I mean, certainly these reactions are driven first and foremost, like I say, because traders have gotten trained to focus on the Fed. That's been the reality of the markets since the great financial crisis. There's also a lot of things out there that we just don't know right now, right? Like there's a lot of lockdowns happening in China. What's that going to do to supply demand bottlenecks, which are some of the things that have been pushing inflation, right? It is actually complicated out there right now. I mean, I spend my mornings each day going through a lot of reports that come to my inbox. And on any given day, I can find coherent arguments for and against inflation, like as one example. There really are a lot of conflicting data points out there. So to a certain extent, fair enough. But at the same time, also not fair enough, because we go back to that fundamental picture, which is that central banks cannot normalize rates. They have to stay behind the inflation curve, because whether the Federal Reserve will admit it or not, they certainly care about the stock market. They've made that more and more clear over the last few years, especially in 2018 when they tried to tighten and the market threw a fit. And then they're like, okay, fine, we won't. Even though they're not supposed to. It's not in their mandate to support the stock market. They certainly do. So for lots of reasons, the Fed cannot, get us back to positive real rates. That's just not in our future. So we have this negative real rate setup that is here for quite some time. And we have this incredible electrification argument that supports most base metals. I mean, I skimmed over the nickel chart that I had there before. Nickel's always been a stainless steel story, right? It's the thing that, turns steel into stainless steel. That's always been the nickel market. The nickel market is going to almost double in the next decade based on battery demand. That's the kind of paradigm shift that electrification is introducing into the metal space. It's a really significant paradigm shift. And so it's really pushing demand. And so that is not something that can be ignored. And so then, where do we go? Do we pay attention to the short term? Do we pay attention to the long term? How do you figure that out? Well, I think gold works no matter what. That's the easy one, because growth, if we get growth, inflation, and tightening, well, that's certainly good for base metals, and it's great for gold, because gold, as it turns out, often rises once we get through the confusion that leads up to the first rate hike. Once that first rate hike actually happens, it usually clarifies the situation, and gold starts to rise in the beginning of a rate hike cycle. So, a growth inflation environment works for all metals. If some of these uncertainties, some of these unknown factors start to take control in the other direction, and we get inflation and growth stepping back, gold certainly works as a security. Silver usually will work alongside that, especially because it's still being supported by the electrification argument, even in a moderate growth environment, because real rates will remain very negative. That will support gold, even if we have some setbacks in the recovery, or whatever word you want to use to describe the market these days. And then in the near term, we have seasonal strength. And that applies not just, we talk about it a lot for gold, but it actually applies to gold and copper and silver and a lot of commodities through the fall. Is a time for seasonal strength. It's traders coming back to their desks. It's restocking patterns for base metals. It's all of those things. Okay, so what's the opportunity today? I mean, gold miners are making ridiculous amounts of money. And so that will pull generalist interest in. That's one of the most important things to remember about the gold setup right now, is that gold miners are like some of the strongest stocks out there just on a balance sheet basis, and they're paying awesome dividends. And so that is really important to pull those generalists in who fuel a gold bull market. The electrification trade is very real. The exploration season is upon us, which is great. Results are starting to come in, and that can attract excitement, at least, when companies make discoveries. And there's certainly a lot of people out there. We were just chatting again in the background here, institutional interest. So funds are still very interested in this argument, this whole space, because of the things that I've gone through. New deals are still emerging. There is a lot of opportunity out there for those who believe that once we get through all of these trees, the forest will reassert. I'm not going to talk about this much because I want to move on, but this is just my slide that summarizes how much ridiculous money gold miners are making and why that helps to attract generalist interest to our space, which really matters because it's generalists who fuel a full gold bull market instead of just, a small one. That's what I wanted to talk about. This is a long slide that summarizes the various newsletters that my service produces. I have one for low risk investors. I have mine that's for moderate to high risk investors. I have one that's financing opportunities. And I have one that is focused exclusively on the silver space for those who love that metal. And that's what I want to do there. So that's what I have to say. And without further ado, I want to move on to the first of the companies that are going to take us through their stories today. So I'd love to ask Morgan to step forward virtually and take us through the latest with, or perhaps the better word to say is introduce us to the Lakewood Exploration story, because it's a pretty new one.
Thanks, Gwen, and thanks for having me on your show. It's a pleasure to be here with this group of folks and a part of this resource sector, which I think is going to be a nice bounce up, and to be in the silver space. So I want to introduce Lakewood. We were listed on the CSE under LWD about 3.5 months ago, and when we listed, we acquired a company called Silverhammer Resources, which had the Silver Strand asset in it. It's in the prolific Silver Valley in Idaho. It is an unbelievable asset, past producing mine. It had only ever been taken down to about 90 meters of depth, high grade coming out of it. We just had chip samples around 2,744 grams a ton. We're seeing that when the original asset was owned by another company, it was just a single asset, and the whole strike length was not consolidated. So the group that we brought this in from was able to consolidate a 5.5 kilometer land package, and in doing that, open up a large amount of unwalked, undiscovered land up to something called Burnt Cabins. So I want to explain the area a bit. This is splay off the Osborne Fault, Lucky Friday, Galena, Sunshine Mine. These are all 2,000 meter deep mines that have high grade silver content and are in similar Revit formation to what we are. We are only at 90 meters. We have now a 5.5 kilometer land package, and we are looking to get our drills turning by the end of summer. And we do have, on a positive, an existing underground. I've personally been in the underground. It's great. It's in good shape, and we're looking to utilize that for our exploration needs coming forward very soon. So that's our Silver Strand in the prolific Silver Valley project. We also just transacted, and this is transformative for us. Our approach is what we call a three-pronged approach. So near-term production potential, large exploration payoff, and meaningful acquisitions that meet those two requirements. So we just transacted on 2 projects in Nevada. So another prolific silver state and probably one of the biggest ones in the world. We transacted on a project called Eliza. It's in the historic Hamilton area. So for a lot of people that don't know what Hamilton was, it was the largest silver rush in the history of the United States. It produced 40 million ounces from 1860 to 1870, and was abandoned. Only ever gone down about 50 meters in depth, very hand-to-mouth mining, very, very high grade. The California mine, which is on our claim, produced average grade between 5,600 grams a ton and 18,700 grams a ton. And it was walked away from and held by many people over time, but long-term holds. And we were able to acquire this through a very strategic person in the industry. He's a very well-known geologist. And so we acquired the Eliza and the Silverton project. The Eliza project for us is transformative in the sense that another high-grade target, another existing underground that we can look at how we're going to make this large exploration payoff, but also how we're going to turn it into near-term production. Now, Silverton up in Nevada, another great project, 933 grams a ton silver from historic. This signature, I'm going to talk about this. I'm going to move through the slide here. And the signature from Silverton is really unique in the sense that it mimics Round Mountain. And if anyone knows about Round Mountain, it's Kinross is one of their flagship gold deposits. It's 15 million ounces of gold. And from the Astra images, we are seeing very similar signatures, if not bigger than Round Mountain. And I mean, I don't say that lightly. Our geologists that took a look at this gave us the whole spiel about, no, there's no other Round Mountain and all this fun stuff. But he got on site and gave a call to the group and was like, okay, hold on, this is very promising. So from a corporate standpoint, we are a newer company, but we have 3 what I consider as top tier assets, or tier 1 assets, high grade, availability to be near-term production. And with that large exploration payoff, it really does sing to the tune of our management team, which I'm going to touch on now. So we have a very unique management team in the sense that we have people like Lawrence Ralston, who is an integral part of us. He started Resource Opportunities. He's the chairman of Metalla. He's started and been a part of some major success stories in this mine industry. He's a 35-year veteran, and he absolutely knows geology. He knows marketing. Excellent addition to the group. And an integral part of our group. We have our chief geologist, Phil Mulholland. He Western U.S. expert, 30 plus years in the area, worked for Barrick. He knows these rocks. And then we have myself and my background. I've spent 14 years in the industry, in mine industry. I've worked all over the world. I've spent time with Freeport-McMoRan in the Indonesia Grasberg complex. I've spent time with the Rio Tinto group on their Oyu Tolgoi complex in Mongolia. I've spent time working in Africa with Golden Star Resources, restarting old mines. So my background really is the mine builder type. So from our management structure, we also kind of have a 3-pronged approach in that sense, where we have exploration experts, we have the mine building sense, and we have a really strong capital markets group behind us. So we just raised $3.5 million on the transaction of Silverstrand. That sets us up very well to drill and explore all 3 projects. We have a very tight share structure. We're about 37.4 million shares out right now, 2.7 million options and 7.8 million warrants. So that gives us a ton of room to grow financially, but it also sets us up well for being very tightly insider held. We're about 42% insider held right now. And overall, as a company, from starting 3 months ago on the securities exchange to drilling in before the end of summer, it's progressing very quickly. We have some high-grade drill targets on Silver Strand that we're looking at and going to execute on. We are starting a geology program on the Eliza and Silverton projects, and really excited because we actually are separating those two out from a geology standpoint. So we have a separate geologist for that area, separate geologist for Silver Strand. So we're able to actually concentrate on these areas that are prolific, they're high grade, and we're able to put meaningful and thought to what we're doing and look at it from a different angle of just pure exploration, but also like, how are we going to build it? And that's where my background comes in is, you know, we get to direct this in a sense that we're going to have large exploration payoff, and that's what we're looking at, but we're also looking at the building side of it. So it's unique in that sense. We also have an asset in British Columbia. It's a very, very, very early exploration asset. It's called the Lacey Project. It really, we're just waiting on some results for that right now, but that's not our main focus. Our main focus really is the Silver Strand asset for drilling, our Eliza asset in Nevada, and also our other Silverton asset in Nevada. Now, to be in the Western US, as I told you about my background, working around the world is unique. And I'm sure all these gentlemen on this call will talk about it as well, because it is such a great place to work. There's a ton of talent there. They're very amenable to mining. There's a lot of prolific mines in the area. And there's the best place to look for a new mine is where there's an old mine, where there's an old deposit. I mean, that ultimately is what we're doing. And we're trying to prove them down to depth, along strike, and we're having success so far. Our programs at Silver Strand really have demonstrated that. We've had some really good results along surface, mineralization, and looking like subparallel veins along surface. We also have something on the Silver Strand project, which is called a gold credit. So we have on average 5.5 grams a ton of gold. And to put that in context for viewers, that most gold mines are built on about 1 gram a ton or less of gold. Our silver grade underground ranges from 300 to 2,500 grams a ton of silver. Most silver mines are built between 100 and 300 grams a ton. So we are high grade. We're going to be proving it to depth, and we have a very tight share structure. So there's a lot of room to grow as a company. There's a huge opportunity for investors here in the sense that we have 3 top tier, potential tier 1 assets that are in some of the most prolific silver districts in the world. You touched earlier on the presentation and on the need for silver in the industry. And I love talking about it because it's often misunderstood that it's one of these hedge metals, because it's not just a hedge. Silver is an absolute requirement in building of microchips. We talk about cryptocurrencies around the world. Well, video cards are microchip based. They require silver solder and silver paste to make. So there is a huge opportunity for tech investors here, because I think as you invest in tech and the technology increases, the electrification increases around the world, you're going to see the requirement for these base metals go through the roof. And I think you're going to see a detachment over time. So that basically rounds up my presentation. I'll throw it back to you, Gwen, and thanks for letting me present.
Thanks very much, Morgan. I'm going to hold questions and we'll just do them all at the end. I'll let everyone do their 10 minutes and then we'll return to each story at the end. So certainly if you have questions for Morgan on Lakewood, then add them in the Q&A chat over here. But for now, let's move on to Warwick Smith, who can tell us the latest with American Pacific.
Thanks, Gwen. Appreciate it. Appreciate the opportunity to come on the show here. Let me start up my screen share. So, American Pacific started the company in March of 2018, and then last year completed a transformative transaction on an asset called the Madison Mine. Madison is down in Montana. It is under partnership with Rio Tinto. Rio Tinto may earn 70% of the project by spending up to $30 million US. The company also has 3 other main assets down in Nevada. We have the newly acquired Red Hill property, which is an internal claim block to New Legacy. We have the Gooseberry Mine, which is a past-producing silver gold mine just outside of Reno, Nevada. And then we have a high-grade epithermal system called Tuscarora, which is just outside of Elko, Nevada. There are numerous near-term catalysts for this company. We have drilling happening at Madison as we speak. Rio Tinto is drilling 4,000 meters, wrapping up hole number 10 as we speak right now. We're going to be drilling at Tuscarora. That is going to take place by the end of summer. And the Red Hill project that we just picked up, that is internal to New Legacy's claim block. New Legacy has just drilled 7 holes, and we're expecting news from them shortly, which will certainly help us. Here's the share structure. 91 million shares out on the company, $5 million in cash, $4 million of warrants that are significantly in the money. Michael Gentile is a 19.9% shareholder. That is new as of the end of May. The company only burns around $100,000 a month, so we're in a very strong financial position at this time. That monthly burn rate will increase based on us drilling at Gooseberry. We'll spend about $1.5 million there. But don't let the low monthly burn rate fool you. Today, we are free carried by Rio, who is spending up to $5 million this year, around $2 million on the first phase of this program that they are underway. So what can I tell you about Madison? High-grade skarn at surface, porphyry underneath. By high grade, here's some historical drill highlights to give you an idea. These are all from 0 to 200 meters. There's about 30 million, apologies here. The previous drilling has been 30 meters of 25 grams per ton gold, 11 meters of 41 grams, 4.6 meters at 82 grams, and then just fantastic copper numbers, 61 meters of up to 7% copper, 8.5 meters of 40% copper, 84 meters of 1.89% copper, and then 2.7 meters of 41 grams gold and up to 20% copper. The skarn at surface, we're comparing the skarn at surface to the Fortitude deposit, which my business partner Eric Saderholm worked at. I'm going to try to escape this and give you guys a better view here because I'm struggling with my. So the Fortitude deposit was 2.5 million ounces of gold at surface. The Madison deposit is of similar rock, similar age, and fits along that same 1,800 meter footprint. Fortitude was initially discovered as a 100,000 ounce deposit. Upper Fortitude became 1.1 million ounces, and then when they got to Lower Fortitude, it grew to 2.5. We look at Madison in a very similar way, as do we think Rio does as well. Rio has found real interest in the skarn. Outside of just looking for the porphyry, they feel that the skarn is a Rio Tinto size target themselves. Fortitude then grew, it became the Greater Phoenix deposit, which is 25 million ounces of gold and 3 billion pounds of copper. Ultimately, this is Rio Tinto. They are looking for something big, and this is why they are there at Madison. Eric always reminds me that this is his favorite slide in the deck, and I think it's for good reason. Part of the interesting thing at Madison is that all the rock runs. Jasperoids typically don't run. When you look at them out there everywhere throughout Nevada, they typically don't run. This runs 0.5 ounce. Native copper, somewhat unique to see, but strong native copper within this system that runs incredibly well. And then massive sulfides. For example, at Fortitude, where Eric was the chief geologist previous to this, they had a lot of massive sulfide, but none of it ran. Look at the grades here. 0.6 ounce per ton gold, 11% copper. The highest grade that we had in drilling last year was 1.5 meters of 69 grams per ton gold, and that was held within the massive sulfide. This lends credence to the idea that there is something big below this that is pushing those fluids up to mineralize all these different types of rocks. So what would that look like? It would likely be a porphyry. Here's core from 2017 that was drilled into the latite porphyry. This is the 5th phase. We believe there is a 6th phase down below it. If you look off to the right and see that latite porphyry, you can see it's hammered. There's chaotic folding, a lot of brecciation. That gives us and Rio Tinto a great deal of excitement. As mentioned, Rio Tinto drilling 4,000 meters as we speak. We are free carried with them spending up to $30 million US to earn 70% of the project. There is drone footage on the website if you're interested in seeing it. I think that is worthwhile for you to view if this is a project that is of interest to you. There's a 3D model, and there's a link to the website there as well. Let me run you very quickly through the other 3 projects and with the catalysts that are coming up for them. Red Hill is 80 claims and around 1,500 acres internal to New Legacy's claim block. New Legacy is a $70 million company. They've spent $50 million on the asset. We were very pleased to be able to pick up this project within their claim block. They're doing great exploration. It is right on the Cortez trend. There's about 100 million ounces of gold along that Cortez trend, and they're drilling down deep to find it. Previous drilling here was done by Barrick, 24 meters of 5 grams, 13 meters of 8 grams. It's confirming that there's that big sediment host gold system that's there. It's the exact type of thing that New Legacy is looking for. It's the target that they're after on this round of drilling as well. We picked up this asset for $25,000 this year. For the next 20 years, we'll own it for a total of around $400,000. So we thought it was good deal making on our side. Here's the location map. You can see right in the midst of the Cortez trend. Gooseberry. Gooseberry is an asset that Eric has been kicking me to drill for about 2 years. Very, very high grade silver gold project. We picked this up for $20,000 because we were able to stake it. That lends a lot of credibility to guys like Eric, who've been able to do this previously. He was the guy who staked Black Pine. That's now with Liberty. They've done an excellent job with that. That's turned into 2 million ounces. We picked up Deer Trail. That's now with Mag Silver. And here we are now with the likes of Gooseberry and the likes of Madison. This is an asset that will start to be drilled by the end of summer. We're hoping late September we will have the drill here. When we picked this up, we had to go out and find the data. We found 12 old bankers boxes of data covered in dust at the University of Nevada, Reno. Look at some of the grades here. Previous production grade, 0.9 meters is 65 grams gold, 4,500 grams silver. 0.9 meters, 113 grams gold, 3,700 grams silver. Spectacular grades. The analogy here is the Comstock lode, which is about 20 kilometers away. It's in the Cape Peak andesites, it's the same rock. The Comstock lode produced 8 million ounces of gold, multiple 100 million ounces of silver. It was the largest mine in the US until the big Carlin mines came along. This is presently its little brother. It's 20 kilometers away. It's in the same rocks. It's only ever been gone down to 1,350 feet was the deepest drill hole. That long section that you see there, the dark pink has been mined out. The light pink is what they refer to as reserves. Obviously, we don't refer to them reserves at this point, but it certainly gives us a very good drill targets to go at, especially with those types of grades. Tuscarora. As you get the feeling, we focused on high-grade assets in the Western U.S., and this certainly fits the bill. If you look at some of the past drill holes there that are either been drilled by us, Novo Resources, which was the predecessor, or Newcrest, they're very, very high grades. We have an internal claim block here that you can see that's 1,818 acres. You can see that South Navajo and East Pediment, which I just referenced, but then you can see all the veins above that run through our project. Those were all previously in production. When you get to our project, there's a fault and 0 to 200 feet of gravel cover. That's why those veins remain, because the old timers lost them. We're going to go after this later this year. We're going to aggressively pursue this. And again, good high grade asset in the Western US. This is the team. I've been doing this since 1999. Eric is the former head of exploration in the Western US for Newmont. Obviously, Newmont was looking for stuff that was 3 million ounces plus, but he had a chance to see a lot of assets that were 500,000 to 1 million ounces. That's really where we fit in. We were able to get those assets and see them grow. Ken Cunningham, former CEO of Miranda Gold, geologist who lives down in Reno, has been a tremendous director for us. Jonas Lang, executive VP with Maple Gold. He's a little bit of the young blood on our board. Ton of energy, great director. And then Alan Esch-Mohan, who is our CFO. I will say this, appreciate the opportunity to come on and speak here. The company's grown significantly over the past while. We've gone from being around a $10 million market cap to a $100 million market cap today. It's worth your while as an investor when you're looking at these to get a feel for these companies. Both Wes and Morgan are stars in the making and running great companies, and they're guys that are certainly worth listening to. If you're invited to one of these and you're at a conference where you were invited to, certainly worthwhile for investors to listen. Significant catalysts coming, drilling from Rio. We'll drill Gooseberry ourselves. We'll get after Tuscarora at the end of this year. We'll see where we go with Red Hill and what happens with New Legacy, but we're likely to bring in a partner and drill there as well. So significant catalyst coming with a company that has cash and ready to grow. So thank you, Gwen. Appreciate it, and I appreciate the time from Morgan and Wes as well.
Thanks very much, Warwick. I often comment on the challenge that I put to presenters to run through, just your entire company in 10 minutes. So a few things that you got to try and cram in there. So thanks for that. That was only 4 projects that you had to try and cover in about 90 seconds each. Again, I've got some questions already, certainly for Warwick. But before we get to those, let's get to our third story, which is Visionary Gold, another new, fairly new story on the market. And Wes Adams, could you take us through the Visionary story? I was going to say Visionary Vision, but it seemed a bit redundant.
Absolutely. Thanks, Gwen. I'll go ahead and share my screen now so that we can run through the Visionary story. All right. So Visionary is a new company that was a first mover into a prolific orogenic gold district in Wyoming. We've got a large initial target. We're working on a 2.5 kilometer long gold trend. And we just started in 2020 with this project. We've made a ton of progress. This year, we've taken 3,500 different soil samples. We've identified, our main targets here. And we've just started a drill program that's going to be about 3,500 meters is what we permitted. And so we're testing this area that's called the Wolf Shear Zone, and it sits within a big, district scale sedimentary formation called the Miner's Delight. And there's old mines littered all over this. So we've put together a really experienced team, and we're using systematic methods to explore this district. And we are really excited about this year's drill program. First, I'll tell you a little bit about my background. I'm a third generation mining executive. The biggest project that I worked on was the Turaparo deposit in Guyana, which was 11 million ounces. And we developed that with Sand Spring, which into Gold X, paid $100 million with the company, and took the resource from artisanal working up to 11 million ounces. Grand Columbia has purchased that for about production. They just ran $300 million to take that. So it was in Guyana, but I have deep Wyoming roots. My family is originally from here as services companies. Wyoming's always been a good place, to work. Very experienced team of geologists to help us develop the project. Dan Housel has got a ton of experience in Wyoming. He was a Thayer Award winner for his work on the Donlin Creek discovery. Eugene Sperry was VP of X for Quaterra for 9 years and was a part of the Tassius development team. Also worked for Rio Narcia, developing the El Valle project in Spain. Pat Hillard is on site today, actually, and he was played a major role in the Pinarena discovery down in Peru. And he's also responsible for several uranium pipe deposits in Arizona, working on the Arizona Strip there. We also have an in-house geophysicist in Ken Sweet, a professor of structural geology in South Dakota School of Mines. And last but not least, Stan Dempsey Sr., who is the founder and chairman of Royal Gold. And Stan's focused on helping us with our environmental social governance as we work to explore and develop mines within Wyoming. Cap structure. So right now we're sitting at about a $13 million market cap. So I really think with some drilling success here, we've got a strong case for revaluation. Currently about 71 million shares outstanding. We do have a few options and warrants, which will bring in some more money for us. We have the warrants are at 40 cents. There's 9 million. They're exercisable at 40 cents. We can call the warrants. They have a strike price at 27. So that'll give us a couple extra $1 million to work with if we have some success drilling. And just briefly, I'll walk you through our project, why we're focused in Wyoming. So we got here in 2020. There's abundant, high-grade gold that's been known for a while, but this has been overlooked by explorationists for about 100 years now. So there's been gold production in the area for between about 1842 to about 1956. But there's been very little, almost no work done since then. But we think there's a great opportunity because we're seeing orogenic gold, which produces about 75% of the world's gold. And so that's the style of mineralization that is preferred up here, and that's why they call it the miner's delight. Wyoming is a very resource-friendly state, produces about 39% of the coal in the U.S. every year. And so we think while gold has been a part of the history here, I think there's a new opportunity to replace jobs that are declining in the energy industry with new gold development. And there's currently 3 gold projects that are being drilled in the state. One is a development project at the CK gold property that George B is working on with U.S. Gold Corp. And then we've got Group 11 Technologies and GFG working on the Rattlesnake deposit. So we'll be the 3rd drill program to start this summer, but I think we've got the highest grade target of the 3. We've seen some really good numbers in our soil samples, in our rock chip samples. Last year we sampled over 1 ounce per ton over a meter. We had 3 meters of 12 grams a ton, and up the trend 500 meters, we've got 4.94 grams, and then just north of us on a parallel structure, we've sampled 2.7 grams. So of the 69 rock samples that were taken on our Wolf claim group, which is about 1,000 acres, the average grade was 2.5 grams. And we had, 1 sample that was over an ounce that came out of a channel over 1 meter. So tremendous grade that we're seeing on site. The main structure that we're focused on sits on privately owned ground. It's got a great geophysical signature underneath it, which suggests that there should be sulfide mineralization and that this is not like a superficial feature. We're going to focus drilling right on the high-grade historically mined area. So the Wolf was active between 1907 to 1911. They were actually carting this ore off. I think it was reported to have averaged about 0.5 ounce a ton. And they mined about a 30-foot width across the shear. And the shear is about 2.5 kilometers long. So it's, a tremendous first target for a junior. And we've really, put together kind of a district scale land package. We have 50 square kilometers that sit in this miner's delight formation. So it really gives us a lot of upside, I think, as a small junior. We did pick up the Wolf or the Mint Gold Leaf mine, where we've sampled 2.5 feet of 1.29 ounces per ton and then 3 ounces per ton. So we're going to do some more work on that. And the idea is really to prove kind of our principles that, there are commercial gold opportunities in this district. And so if we can have a successful first program here at the Wolf, I think that's really going to open up the district scale potential. And so we're starting with a 3,500 meter drill program. We've got a great team in place, going to be out really marketing this thing for the first time around our initial drill results. And also, just have spent a lot of time up here earning trust in the community and trying to be a good steward of our investor capital. So it's going to be a really exciting year as we tap into this old past producing gold district, and lots of potential here, on the exploration side. And we also have, group and team on the board and management team that everybody's done this before. And so I think right now it's going to be an exciting time to be a visionary shareholder. And with that, I'll turn it back over to Gwen.
Thanks, everyone. Morgan, let's swing back around and start with a question or two for Lakewood. You ran through your 3, you had a transformational deal just a few weeks ago to add 2 significant assets to the portfolio. Can you explain your strategy at this point? So what is Lakewood's capacity to advance 3 projects in terms of people and dollars and focus? What is your strategy to tackle 3, as you call it, very promising projects at the same time?
So our plan right now is fairly simple in the sense that we are planning, and we're going to be drilling Silver Strand, the Idaho asset. We're going to be proving that down to depth. We are running programs on surface right now to prove out surface mineralization, outcrops. Like we're doing a lot of sampling there. I've hired, or in the process of hiring, a geologist for Eliza and Silverton to run a full geo program out there. So now we're going to actually come up with drill targets. We're going to do surface sampling, probably some geophysics, that type of exploration methods. We're using drone technology on our Silver Strand asset right now. So from a capital side, we raised that $3.5 million, where our burn rate's fairly low right now, and we will be utilizing that in a very methodical and shareholder friendly way to explore. So again, catalyst there is the drilling. We're bringing Silver Strand up to 430101 as well. So we have 4301 that's just being completed on it. And we're going to start very, very quickly exploring and mapping Eliza and Silverton. So that's pretty much where we're at.
I guess I'm curious. When you're certainly Lakewood's certainly still in the growth phase. I mean, you're new, so by definition you're in the growth phase, and you're working in an area where there is a lot of talent and sort of exploration and mining capacity, but there's also a bunch of people operating there. So what's it like trying to find people and sort of infrastructure, like whether it's geophysics equipment or whatever it might be? Can you describe a little bit sort of what it's like operating, and whether the current market is helping or hindering you in that sense?
Well, I mean, as most people that are in the resource sector know right now, it is very busy for drilling. And that kind of comes back to our unique approach with Silver Strand to start, was looking at the surface targets and then also having that available underground. Being able to look at it, go in, bring it back up to MSHA, which isn't much work, and maybe stick an underground drill in there. And from the standpoint of acquiring drills, I think we've got good leads on them. We're fully engaged and contracted and expected to be drilling by the end of summer. So yeah, there is a lot of, it's very busy in the industry, but we're very picky on the talent we have. I mean, we have Phil Mulholland, who is a known commodity in Idaho and in Montana, and has had some big wins in his career, that's joined us, but also being able to attract the right talent versus just talent is really important to us. So we're very integrated in the community in the sense of that. We have a land guy, or the geologist in Coeur d'Alene, that is very integrated with us, and he's been in that area, third generation as well. His name's Kurt Hoffman. He's been a huge advantage to us. So we're partnering with the right people in the area and the right companies for our success. You're right, the industry is busy and there's a lot going on. So that look, we have to look at it through a different lens, and that's outside the box thinking really is a core part of what we're doing. New technology and outside the box thinking has helped us so far.
Gotcha. All right, Warwick. A lot of questions have come in about Madison, so I'm just going to sort of summarize, pull a bunch of different questions into just two questions to try and keep it streamlined here. Can you describe Rio's exploration interest? Obviously, there's a very interesting skarn target or area at Madison that's been tagged into and has returned some great results, but then you spend a lot of time talking about the porphyry driver for that. How do those divide out? You have some recent trench results that are part of that story. Can you describe what it is that Rio wants to find, and is it both? Is it great question. Look, when I'll full disclosure, when we bought Madison, we bought it with a partnership with Rio. That was intact. And at the time, Eric and I knew the asset well. We actually toured this asset in 2016. We ended up buying it last year from a company who had brought in Rio in April of 2019. And then in June of 2019, decided they were going to become a psychedelics company and focus on medical mushroom. So we were able to go in and buy it. We bought it for a $2.4 million valuation. Because of that transaction, we've been nominated for S&P Global's Deal of the Year against U.S. Steel, Grange's, a bunch of multi-billion-dollar companies. So
a nice hat tip to that. Rio, and to my comment on this is when we got involved with Rio, Eric and I looked at each other and went, they're probably porphyry or bust. That was our thinking. That has not been the case. They have found real interest in the skarn. All of the exploration this year has been skarn focused. Now, that being said, the question that dovetails into that was about the trenching. So Rio, as part of their exploration program, did trenching about 1.5 kilometers away. They took the trench through some epithermal veins that they weren't necessarily expecting. Those ran 15 grams gold, 600 grams silver, and 1.5% copper. They've already built drill pads there. They're going to drill those. That's a different style target completely. It's 1.5 kilometers away. That gives us some real excitement. Yeah, I think reservoir minerals, right? Epithermal at surface, porphyry underneath. They own 30%. They sold it to Nevson. They're $360 million US. That's the opportunity here. There's a real at surface target that is a big company, Rio Tinto, second largest mining company in the world size, that can dovetail into a big porphyry where this can become very large.
Gotcha. Okay. You want to describe a bit what it's like as a, to be blunt, tiny company? Well, you're larger now than you were 4 months ago, but working with the biggest mining company in the world, like pros and cons, and just how that runs for you.
Second biggest concern coming into buying the asset with the transaction with Rio was what's it going to be like? Because at that time in particular, it really was David and Goliath. We were about a $10 million market cap. We're around a $100 million market cap now, so we've grown, which is good. But typically, the concern is, how's it going to be with news flow? What are they going to be like to work with? I'm going to say this very clearly. Rio Tinto have been excellent partners. We've developed a very good relationship with those guys. A lot of credit to Eric Saderholm, who you know, who worked at Newmont, knows how to work with these big companies, developed a great relationship with Bede, who's on the ground, and then the North American manager who's in Montreal. Last year, they had one drill hole come out that they rushed. They sent that to us immediately. We were able to put that out, one drill hole standalone. When they get drill holes, as soon as it's through their QA/QC, it goes into a system called Pipeline. We get a copy. When they get a copy, we write the press release. We send it to them. Within 5 business days, we have an approved copy that goes out. Tremendous communicators, great partners. Really pleased to be working with them.
That's phenomenal. That is not a description that doesn't fit the usual description of working with a major.
Look, I've worked with a few of the different majors along the way, and a lot of the mid tiers. They are, it's an aberration. It's not the norm. They're very good to work with. But like we've worked very hard on our end, especially through COVID, where there were challenges, to be a good partner on our end too. So it does go both ways. You have to work well with your partners, especially when they're larger. So, again, all credit to Eric in that case.
For sure. Hey, Wes, I want to ask you a bit about setting the scene in Wyoming. Miner's Delight, first of all, who gets to work in an area called Miner's Delight? Like, it couldn't be more perfect. But it's Miner's Delight, yet it's an area that's hardly seen any exploration in sort of the modern times, to use that term. Tell the backstory here. Like, there was a surge of exploration, and then talk about, there's that sort of defined 2 trends, and then there's one area of one of those trends that you're particularly interested in. Do you want to just sort of run through that funnel?
So gold was discovered in 1842 in the Lewiston district. So there were guys that were traveling, along the Oregon Trail that made discoveries there, and then they ventured out and started, finding more gold. They eventually settled at a place called South Pass City and built the Carissa mine. And the Carissa operated for about 100 years. It produced about 10,000 ounces a year. So it was operated on and off. That was kind of the biggest of the mines. There's also a ton of alluvial gold that came out of these hills. So the alluvial gold has to come from somewhere. There's lode gold deposits everywhere. And so, there's 2 main structures on either side of this craton. Basically, it was, just a sedimentary mudstone that was sandwiched and cracked and fractured in many different places, much like what you see in the Abitibi in the Temiskaming sediments. And so after that happened, it was intruded by granites, and then that brought the gold mineralization in. So we do see exceptionally high gold grades. I think that it's been overlooked for so long because everybody thought it was just like an old historic district. And Anaconda did some drilling underneath the Carissa. They hit about 1 ounce per ton over 6 feet. And so they had really good results, but the gold price then was like $200 an ounce, and everybody was looking for low grade heap leach. And so, it just has been kind of forgotten about. And so we're glad to be the ones to be bringing it back to life. And, we're seeing, 30 feet of 5 grams, across tunnels. And so if we can duplicate some of our drill results into the sulfides and get those, those same type of numbers, I think we're going to be in great shape going forward. And all indications are that if it's in the sulfides, it's going to be along the strike as well, and on all the other parallel fractures. And there's tons of them across this district, many of them unexplored. So it's going to be a really exciting drill program and ongoing exploration camp here.
Gotcha. Must be interesting being sort of the first. You have deep Wyoming roots, but being forging new ground in establishing this as an exploration play. Explaining the story to institutions and retail and trying to explain what's going on. That's a challenge, but then at the same time, there's an opportunity where I guess you don't have a huge amount of competition for picking up interesting ground.
Yeah, they're starting to get a little bit of competition up there now. There's some other smart geologists that are picking up lands, and that's great. I think the more people we can get to figure this out, the better. And eventually, hopefully, we'll be able to have some synergies and consolidate the entire district. We have a large portion of it right now, and so if we can prove our concepts and prove that this is going to be a district play, I think it's going to get really exciting really fast.
Warwick, I'm just going to end with one more question for you. When we were all chatting before this call started, you said you'd just been on a marketing trip, and you were talking about sort of the reception that you got on that trip. And of course, I want to bring that up because I started with summer doldrums. It can feel pretty boring out there. There's been 1 or 2 questions coming in about marketing and exploration stories these days. Yeah, do you want to just give some comments on what it's been like marketing and sort of what you're seeing out there as you take your story on the road?
Yeah, I'm happy to. I'll even back it up just a little bit from that, but I'll keep it tight and succinct. Look, for some time, American Pacific traded sideways for around 7 months, and it was essentially stock dynamics. The stock had run up, the financing had come free trading. The stock that we paid for the asset came free trading, and the stock traded sideways. And I knew for some time that we needed a bit of a spark, and we found that in Michael Gentile when he came and invested in the company. He's opened an awful lot of doors for us, and the company's done well since. We're going to backfill that now by drilling and getting out and aggressively going after these assets, and we're excited to do that. What we did find upon going to Toronto, I was in Toronto last week, the doors of the institutions were open. A lot of guys wanted to see us. All the investment bankers that we either knew from the past or got introduced to on our way to this trip, full rooms, 10 guys in a room and 15 guys on Zoom who, weren't comfortable coming in. But the doors were certainly open. The institutions, the smart money is looking. They're looking at stuff that is where, you got to be that $75 million market cap or above to get that institutional interest. You have to have that liquidity. American Pacific's trading 1 million shares a day now. So we've got that liquidity. We've got that following. For those companies, the doors are open. Those guys are forward thinking, and they're looking ahead going, yeah, it's summer doldrums today, but if this is the type of thing I can get invested in now, I'm going to see it do well come September, October, etc., as you well know. So yeah, it's happening. It's coming. I know people have been frustrated with some of the juniors, but believe me, from a guy in the seat, yeah, the junior stories can change very quickly and can grow rapidly. We've seen that over the course of years, and I think we'll see that again and again.
And there you go. I think that's a great place to wrap it up. Like Warwick said, it wasn't very long ago that he was the $10 million company, and that has changed significantly in the last few months. And then both Visionary and Lakewood are just earlier stage stories. They're both pretty new stories, just getting started on their exploration journey. And so it depends what stage of the game you want to jump in at. One of the things I love about the metal space is that there's good opportunity at all stages of the risk spectrum. You just have to decide as an investor which stage is the right fit for you. With that, we've been on the line for an hour, so I want to say thank you to Warwick and Morgan and Wesley for participating today. And thanks, of course, to the audience for listening, for sending in questions. And if you want to get a hold of any of us, we are all very easy to track down on our various websites, or you can contact Six here and they can put you in touch. So with that, thanks everyone all, and we'll see you again at another show soon.
Thank you, Gwen.
Thanks guys. Bye.